What's up, D-Gens? Thanks for checking out the channel. If you guys haven't done so already, make sure you comment, make sure you like, and make sure you hit that notification bell. But the biggest thing that you guys can do for this channel is to take the URL and post it all over your social media. So with that being said, sit back, relax, and enjoy a little bit of Brendan's speech that he gave down in Miami at the virtual Cardano Summit.
We know that we've been in a high inflationary pressures for quite some time now, and when the Fed had started to raise interest rates, what were they telling us? They were telling us that the inflation due to COVID was transitory, right? That it's going to automatically by itself just get better. And so when they said that, they assumed that they didn't have to take much action to fix what was happening. That would correct itself. We know now that they did not have the proper foresight to understand the real pressures that we were facing, and that came now in the highest increase of rates that we've seen in the history of the United States. In the shortest period of time, they went from 0 to now we're at what, 5.25 to 5.5, and that was the fastest they've ever raised interest rates, and that's because they didn't have the foresight to see what was happening. And so that's why, for us individually, we need to find ways that we can outpace inflation, that we are, self-sovereign, and that we can take our wealth and our future upon ourselves, that we can make the decisions and not have to worry about a governing body, right? This is what we always talk about when we talk about decentralization. When it comes down to it, we are responsible for our actions, and we are responsible for our future. So I'm going to give you a little bit more information on this now. Has anybody ever heard of ITR Economics? So they're like a business management consulting firm, and they do a lot of projections. They're currently projecting that we will have a recession by the end of 2024. Now, a year ago, they did not say that we were going to have a recession in 2023. In fact, they didn't have it on the horizon at all. They changed their tunes this year because of how high inflation went and how fast the government has increased interest rates. So what does that look to us? I mean, how many people expect the bear market to go to 2025, a bull market to go into 2025 or 2026? A lot of people say that, right? Potentially, and that's a possible thesis. But if we have a recession at the end of next year, well, the bull market might be shorter than we had originally anticipated, right? And so you need to understand what your strategies are depending on what the outcome is, right? We don't know what that's going to be today, but you have to understand that we have to have different strategies, right? That was the first thing on the slide previously. You have to have different strategies depending on what the actual information that's given to us as we move forward. Now, we can have a great thesis. The Fed's thesis was inflation is going to correct itself. Well, that thesis was wrong, right? And so then once they realized it was wrong, they had to then raise rates at an alarming and unprecedented rate because their thesis was incorrect. But raising of rates is one of the main tools of the Fed and how that they try to control inflation. And normally it's interesting because we were at like a 0% interest rate for the longest we've ever seen, right? And in the cryptocurrency community, we've really never seen any high rate of inflation or high rate of interest rates. So it's going to be very interesting how the market responds to its first cycle where we have these conditions that are affecting markets, right? And we're not just talking about crypto markets, we're talking about all markets and all economic possibilities as well. I've already talked about a lot of this, so I'm not going to go through it, but the one big thing is the lag between policy implementation and the effect that it has on the economy. So with the Fed or anybody, it's really important for them to have that foresight to understand, hey, I know that once I start raising interest rates, it's going to take a fair amount of time before we actually see those effects in the economy. So by them delaying the raising of rates early on, that really affected the economy, and that's why we've had such high inflation for such a high period of time, because they didn't take any policy action. So that lag is something that we're still seeing today. And so currently they did not raise interest rates just a few days ago. I'm skipping ahead a little bit, but they're not planning to raise interest rates. The market doesn't expect them to raise interest rates in December. Right now, the economists say 75% chance that they will pause rates again in December. So what does that mean? That means that the market is building in the thought that we might not get any more rate hikes. Now, we don't know if that's the case. We have 2 more CPI reports, right? How inflation data is coming out. We have 2 more inflation reports before the next time the Fed could raise rates, and we have 1 more jobs data. Did anybody see the jobs data that came out this week? What did it look like?
Which one? Which one?
Yes,
The real one or the...
Well, I haven't gotten to this point yet. I got that a little bit later. But essentially, what they said is the jobs data came in better than expected, essentially, right? So the economy added 150,000 jobs, and unemployment ticked up. So what the Fed really wants, and they won't tell you this, is they need employment to go up a fair amount to combat inflation. Why is that? Because the more money that people are making, the more money that's being put into the economy, which drives inflationary pressures up. Less people working, less money in the market, that drives inflationary pressures down. And so the Fed, they know, because every single time that we've had high inflation, how have we had to combat that? Higher unemployment, right? And so they're expecting that, they're still expecting that, so we may not have seen the worst when it comes to employment. Numbers can always, you can go to the next slide. Numbers can always be used to the person that is giving them to use benefit, right? So, for example, when we look at inflation, we look at it in a 1-year period. Has it always been that way? No. In fact, just a couple of years ago, all inflation was based off a 2-year period. So if we're looking at inflation now in a 1-year period, well, it's going to look a little better than if you took the average of the last 2 years, right? And so sometimes the data that we get and we receive might not be historically accurately compared to other empirical data. And so these are things that we need to understand as individuals so that we can make the best decision for ourselves and our futures and our families' futures, right? Because at least for me, I've learned that I can't rely on other people. I can't rely on the government to make my life better. I have to take control to make my life better. What was that last slide? Sorry, what did you look at? Oh, and Congress can reduce inflation by responsible fiscal policy. Wow, I don't think that exists anymore. But it could at some point in the future. We won't need to have to. Another way is we could rapidly increase GDP, right? As GDP increases, then inflation doesn't matter so much, right? Because we're sort of, those are feeding into each other. That's not happening either. The other thing is increased taxes, right? The government has more money, less people have less money to spend. So again, less money to spend, less inflationary pressures. I don't think they're not really planning to raise the taxes too much recently. They're probably not going to have responsible fiscal policy anytime in the near future. And so they'll just continue to try to print money to offset what's happening right now. And what happens when you print more money? You cause additional inflationary pressure. So currently we see I say we, economists, not myself personally, but for example, ITR Economics, they say that inflation is going to come down under 3%, and then at some point, because of how much money the government's spending, it's going to slowly tick back up, right? So this could be just a small little relief to then increased inflation. So we need to find ways that we can overcome that. So I don't know how well you can see this, but this is essentially what the Federal Reserve and their economists expect the federal funds rate to be moving forward. So as you can see, right now it's about 5.5%. This was as of a month ago, right? So this could have changed slightly, but this is the most recent data that we have. They expect rates to stay high all the way through the end of next year, right? We're not expecting to see any rate cuts probably for several months, which means that sticky inflation and high interest rates are really going to have effect on our potential economic future. And so we have to be ready for this sort of higher interest, higher federal funds rates. I know inflation's around 4% right now. Does anybody know what inflation is in South Florida? 8%, right? So we're actually having the hardest time out of anywhere in the country when it comes to inflation. And we can see that. How much did a house cost 3 years ago in Miami? Half the price of what it costs now, right? And so we're saying, okay, that's 50%. How can next slide. How can I manage that? Well, you can work more, you can make more money, Maybe you don't have the opportunity to do that, but maybe we don't want to work more. But that is one way that we could hedge against inflation, right? Make more money. We could save more and spend less, right? So therefore but again, those are things that we have to either work harder to do or cut back in some way. So what are ways that we could potentially try as the future goes, I'm talking long term, really make our money work for us? Sorry. So traditional savings, savings accounts don't really exist anymore, right? The average, you can see 0.46% is your average interest in a savings account. Well, if your inflation's at 4, 5, 6, 7, 8, 9, 10%, I don't think you're making any money, right? You're losing money or losing buying value in the very least. Traditionally, the government's always said, hey, bonds are a great way for you to, not only give money to the government so they can spend it in the short term, but we'll pay you back in the long term. So I-bonds, 4%, give or take. Well, inflation's more than that. So you're not making any money, of course. E-bonds, what do they say? Well, if you hold them for 20 years, we'll guarantee that your money's doubled. But they don't guarantee your buying power is doubled, right? What was inflation from 2003 to 2023? 67%, right? And that doesn't account for the taxes that they also take out of bonds. So really when it comes down to it, you're probably not making any money, or in many cases you're going to be losing money with this type of investment. Not that bonds are always a bad investment, but it's not something that's going to really increase your wealth, right? It's not going to help you long term. So what's a store of value? Does anyone know what definition of a store of value is? Essentially places to keep your wealth that have a long history of not being affected by a current economy, right? We live in the United States, so we worry about the dollar, but globally, someone in Japan might care more about the yen, right? Or in Taiwan, they might care about the won. In South Korea, they care about the won. But for us, I'm looking for things that aren't tied to a currency, right? What is the United States dollar's worth? Why is it worth what it's worth? Someone will give you a good for it, right? It's backed by the United States military. That's a pretty darn good reason. But that doesn't mean that that'll always be a good reason to own a US dollar, right? It doesn't have any intrinsic value, right? There's no gold standard. There's nothing that it's actually tied to except the wealth of the country and the power of the military, really, when it comes down to it. So value is determined based on what people give you for. And so for me, I look at stores of value of things that could be valuable even if currency starts to collapse. So I said end of next year, the ITR Economics is expecting a recession. A recession is just a small contraction of the economy, essentially, right, over a short-ish period of time. What is a depression compared to a recession? Does anyone know the difference?
Longer period of I think it's 30 years of depression.
Longer period and steeper recession. So minimum 3 years, and then in 1 year, a loss of GDP by 10%. So ITR Economics posted this past month that they're predicting the second depression in the history of the United States in 2030. So if, again, that's the current information that they have based on empirical data, historical data, and what we see in the economy, right? The government printing a lot of money. So think about that. In 7 years, if a depression were to happen, would you be ready for it? I don't know if I'd be ready for it, but I'm certainly going to have a plan in case that's going to happen, right? And this is what we talk about strategy. You have to understand what the potentials are for the future, and you have to be able to plan for it. And so for me, I have two theses that I'm working on in the current market. We don't see a lot of people in this room. We call this a bear market. In reality, we're probably in the start of a bull market, right? Maybe 20% into a bull market. And so we have a long way to go. But the question is the bull market going to roll through 2024, or is it going to continue into 2025? And I'm sure many people here are investors and investing in different things, like maybe Cardano or cryptocurrencies. Or I don't suggest buying anything that I talk about here. It's not financial advice. But these are just things that people have done historically that have helped them, right? So precious metals, gold, silver, there's value there, right? If a dollar collapses, if there's hyperinflation, that is something that is tangible, right? It's an asset that can be used to exchange goods. Sought after designer goods. Rolexes and watches, believe it or not, have been a really good store of value over the last 5 years. Rolexes have increased by 50% in 5 years. Now this year they've decreased by a couple of percent. But if your dollar's in a bank, you're decreasing by 5%, 6%, 7%, 8%, right? So even a 2% loss is better than where you might be keeping, your money in the bank. And then there are other types of designer goods that people invest money in. Now, I don't know anything about purses or shoes, but one of the things that's important is that there's a finite amount, right? That brings value to something. Rolex, they made limited editions. That's why people like them. They know the name. That's why they store value. Something that is inflationary, right, that just is going to keep creating over and over and over, loses some of that value. So limited edition and really understanding the market and the future market is helpful. Real estate can allow for passive income, right? If you have rental properties, even if you're in a tough market, you have a store of value and a potential to make more income. Now, some investments have a higher level of entry than other investments. Art is like this as well. Art can be a great long-term store of value, but the barrier to entry to art is challenging. Again, artists die and they don't make any more art, right? So there's some finite ability to that, and that can create demand. Other things with real estate, farmland, it's a finite. There's only so much land anywhere you're going, right? So at some point, as we continue to grow in the earth, well, there may not be much land left, especially land where people want it. Maybe digital land, I don't know, maybe in the future. But I'm talking about real hard asset at the moment. Not that digital land, it's selling for millions of dollars in the last bull market, so that's very interesting. But and then cryptocurrencies. We're always looking for new technologies. Technologies are what people have invested in to make money in a long time. We look at the early .com bubble, right? The newest technology was the internet. And people made a lot of money, understanding as that technology developed, investing in it. But at the same time, .com bubble also lost a lot of people money. And why is that? Because there's still risk when it comes to new technology. There's still risk when it comes to any type of market. So you have to do research and understand, hey, what do I find value in these areas? Is it the community? Is it a founder? Is it someone that you really trust, right? These are questions that you need to ask yourself. There are also ways within cryptocurrencies that you can create passive income, just like with real estate where you're receiving money, there's staking, there's pools. I know some of these people are creating these tools. Now, there are still other things when it comes to pools, permanent loss, and other things that need to be taken into consideration. But, we see a lot more people calling Bitcoin digital gold, right? And why is that? Because it's a finite resource and maybe soon to be considered a commodity resource. So if we get a spot ETF, essentially what the government is telling you is that Bitcoin is now considered a commodity. I'm not here to talk about Bitcoin, but we're seeing some interesting regulation happening, and we'll see where that goes. And those are things important to take into consideration. But none of these cryptocurrencies are tied to a specific currency, right? Whatever the global currency is probably what you'll transact in until cryptocurrencies are more widely accepted. But again, what is your short-term view? What is your long-term outlook? And how much time do you need to store value? These are questions that you need to take into consideration and figure out for yourself, hey, what's my age? What's my risk tolerance? How much do I need to how long am I looking to wrap up this investment, tie my money up? And so yes, everybody's decision will be different for themselves, but I think that pretty much covers it. So it's really what we're trying to do is take control of our lives, not just financially, but money doesn't make you happy. So you have to be happy yourself, and then money makes things easier. But you also have to be self-sovereign. You have to make decisions for yourself. And I hope you guys check out our YouTube channel, DGen Roundtable. We talk a lot about economics and crypto-related topics and general economic news, just sharing whatever information we've learned in the space with our community to try to, keep people from making the mistakes that we've made in the past when we get into the space. I mean, everybody that's been in this space has made mistakes, right? It's hard to navigate. And so if we can help the future make less of those mistakes, maybe that'll increase adoption, right? So, questions? Comments?